Let me check something really quick. All right, I'll take questions. I'll answer questions at the end. If for some reason you can't hear me, let me know. Just type a question, at least just telling me, and hopefully I'll see it. So coming into today, we'll start with the weekly chart since it was a Friday. Weekly support and resistance was important. We tried to close. We broke below last week's low, but as you can see, we closed above it. And big bars, pullbacks. It's a tight trading range. And the reality is, the reality is that, yes, I agree with that. I think we're going to close this gap down here. And the reason is just, well, is this going to be a measuring gap late in a trend that leads to this? Are we going to get comparable to today? Let me get rid of some of these lines. I'll kind of redraw it as I go. So over here, there was the potential of a measuring gap that was going to lead up to here. We had a trend line above, and the odds were it would close. That's because the reward is big, and generally most gaps close and fail and lead to some sort of exhaustion. So back to the weekly chart, I think we're going to close this gap, and realistically, I think we're going to close the gap, and then I think we're going to get a new all-time high, just because that's two likely targets. But it's a trading range. Daily chart's pretty interesting. One thing Alice talked about for a while is we have a double top over here, two legs down. A lot of times when you get these subtle double tops, they lead to two legs. Maybe I wouldn't say 50% of the time, but definitely well above 40. So closer to 50% of the time than 40% of the time. And usually the second leg down, so here's leg one, pullback leg two. Usually the second leg down can be violent. However, oftentimes you get something like this, where this is possibly the first leg. The rally or the pullback is rather weak, and then we get some sort of potential second leg down. Now, the only issue I have with that now is it's just not setting up like that. The Bears had a chance over here, and we're not getting, even over here, they had a really good chance here, and they just couldn't do it. So I'm not as confident about that anymore. But same thing. Daily chart, great bear bar, but why the bad follow through? They got a bear bar, but we couldn't close below yesterday's low. We couldn't close down here. I think we're going to get down here and close the gap. But again, I think it's a leg in a trading range. And look to the left. What happened when we fell below here on the 13th? We found buyers. So I think when we fall around here, we're going to find buyers, because that's what trading ranges do. And, by the way, let me see if I can find it. We had that on the 18th. This is sort of similar to what I'm talking about. So rally, subtle double top, two legs down, but we ended up having a much stronger second leg, even though it was overnight. Here, this is a good example. So we had a rally, tight trading range, led to a double top. Sorry, 1 second. Yeah, I'll show the August 2nd low in just a second. So subtle double top, two legs down, and we had two legs here and a decent buy, but the rally wasn't strong, so it looked like a leg in the trading range. Then we showed off sharply. Yeah, the August 2nd low, it's actually this green line right here. So what it is, here's the daily chart again. Let me just go to my actual daily chart. It's cleaner. It's this low right here. So the August 2nd low is 21.35. Now, since you're using NinjaTrader, I'm on the continuous contract. So price is factored in. So for example, let me see if I can do this. If 8, so 8-2. So if I tried, let me see something real quick. If I tried ESZ16.D, yeah, okay, see. This is the December contract, and the price is going to be $21.34. But if I go to the actual ES, $21.35. So this is the low he's talking about, and you can see we tried to reach it. 60-minute chart, again, tight trading range. Kind of looks to, upper range, lower range. We're just forming one large trading range. I don't have a lot to say about it. We've been channeling down, but again, we broke below here. You don't want to see this when you break below major support. So this just all looks like a trading range. All right, let's get to, I'll look at the Globex real quick. Here was the overnight, spike, pullback, and we channeled down, 3 pushes, 1, 2, 3. Tested the top of the channel up here, but really, this all looked like a leg in a trading range. So for the E-mini, let me fix my scaling real quick. Okay, so, here's been the E-mini for the past few days. We sold off, went sideways, tried to break up, trying to form lower highs, 15-minute chart, trying to form lower highs here, but again, we just broke below the low of last week, which is this low, and this green line is the August 2nd low, so it's been a magnet. We broke below it, and we turned up. So coming in, let me turn on the session break and just kind of go bar by bar real quick. So let me just do always in real quick before I do all that. I primarily trade always in, so I'm for the most part, most of the time I'm going to speak in terms of swing trading. And I think that's the best, I think that's the best style for most people. You don't have to worry as much in terms of really, really high probability, and it makes the math better for most people. So always in long, always in short. And yesterday we were always in short over here coming into today. Yeah, so big bear bar, but again, we closed above yesterday's low. Probably going to find buyers down here. I would not sell, even though I think it's always in short. Big bull bar, probably always in long. There we go. Sorry about that. It's kind of bothering me. Big bull bar, but probably always in long. So again, one thing Al mentioned in the room, we're forming lower highs. If price stalls here, we're at the 15-minute moving average. So if you're buying, you've got to be very careful. The risk is big, and we could easily get a deep pullback, similar to, I kind of see it comparable to over here. We're getting lower highs, we get a bull breakout, but in this case, bad follow through. But you can see right after the disappointment, traders tried to get out of break even, and then we sold off. So always in long, but there's your warning. That's the buy the close. Here's your bad follow through. This is the disappointment bar. So what will buy the close traders do? What will traders up here do? Will they hold? Will they clearly try and get out of break even? You can see price it tested this close, but did not let traders out. Then we got a bear breakout. So this is one of those situations we see all the time. I think it's okay to get out below here. It's okay to get out below here. If you're quick, maybe you get out quickly on the open. But when you're down here and you see this big tail, I'd probably hold long at that point. I think it's still always in long. And if you do get out right here, guess what? You've got to buy again here. So that's the difficulty of getting out. You've heard Al mention, I'm sure by now, the skunk in the road. There's 2 stop placements, and a skunk in the middle of the road is bound to get hit. There's the early exit and the late exit. So if you're a swing trader and you buy up here, you either get out early, below here, or you get out when it's clearly not always in long. And when you're down here, well below 50%, you're at yesterday's, very close to yesterday's close. You're at support. So I would not get out of shorts, I would not get out of longs here. And, if I went short here, I definitely, it's kind of tricky. When you see this big tail, it's kind of a warning. It's similar to over here. The bears did okay, but they're getting tails. Probably means we're going to have a pullback. So if I'm looking to sell, I'd wait for the pullback. I think it's better to wait for a low too. However, in terms of always in, bears probably get out up here. Maybe if they're quick during this bar or on this close. Not really always in short yet. They needed a big bear bar. If they could have gotten this bar right here to close down here, it'd have been always in short. But it wasn't, and then we got this. So bears get out, theoretically bulls get long again, or they wait for, this close or this close. But really not all that easy. It looks like we're getting a trading range. And you have to think about the bulls who buy up here, buy more above a bull bar, and you can see they're going to take profits up here, and that's kind of what in part started that this small pullback bar. But anyways, in that case, 3 bars up, bulls either buy here or they buy the third close, stop down here. You won't call it a low one short, it really doesn't matter. Low one short, but after 3 decent bull bars closing on their highs, following these 2 bars, I certainly would not sell below. If anything, I'd try and buy below, but a lot of traders, if they're quick, they may put a limit order to buy this low for at least a scalp and put a stop order to buy above in case price never goes down and goes straight up. You also have to be thinking about a measure move up of these bodies. And, we've got targets up here, possible leg 1, leg 2, so spike, pullback channel. So always in long, again, always in long, but what would the follow through look like? Okay, follow through, but why? Why are we hesitating at the August 2nd, this trading range low that we just talked about on August 2nd? Why are we hesitating all through here? And then we get disappointment. Well, for always in traders, I think they get out here, micro double top, and you've got to ask yourself, trading range day, reasonable to sell this high. Bears will sell this high, and probably sell more below a bear bar here, or they sell here, sell more below a bear bar. So this could be exhaustion, and traders will sell it. So you've got to question. A lot of times when you get exhaustion gaps, first logical target is tested this low. So if that's going to happen, kind of like over here, the bears need to do something strong. And if they don't, then we'll go sideways to up. So, again, you can see bulls trying to get out at their entry at the high close, and they're failing. Always in, I'd get out below here, maybe below here. I'd wait for, a couple legs sideways to down. I really think we're going to get close to this low or this high and probably close it. But the bears are not getting, where are the consecutive bear bars? We had that maybe last week. Yeah, we had it up here. The bears really want this. These are, because it makes it a lot easier, We have a breakout, second leg up likely, another breakout. Well, usually at some point you're going to find exhaustion and you expect 2 legs down. When you see these 3 strong bear bars, sell for any reason. And it's a lot easier to take the short. But when you get days like today where you just really don't get, you're not getting the consecutive bear bars, it makes it much more difficult. And that's because the bears are not, there's lack of conviction. Everyone's scalping. And we probably have to test the moving average. So again, bulls buying below bars, bears selling above bars, buying below bars. We're getting increased selling pressure, which is good for the bears. So at this point, if I was short, I think you probably just get out. I just get out at the moving average. I definitely get out on this close. I think it's back to always in long on this close, but again, the bulls need to break above this high, or else it looks like a leg in a trading range. We're getting dojis, sideways bars. bad follow through, tails, bigger tail. Here, I definitely get out below here. You got to ask yourself what happened here. So traders immediately sold when this bar went above this high. Traders immediately went short, at least for a scalp, or sold out of longs. Trends don't do that. So that's not good. You can see, buy the closed bulls getting out, and we're going more and more sideways. So here, second entry short. So you can argue right here, micro channel, broke above, not a great signal bar, first reversal down, will fail. That's very logical. But, what do you do here? So now you have, if you want to think about it, the second entry short with here. It's also a micro double top, up, down, up, down. Big bear bar closing when it's low. Do you sell? Well, I think it's always in long. I think bulls get out aggressive bears short, or they just sell during this bar. When you see, when you see a bar like this, you just sell at the market. And it's hard to do, but you just have to, if you try to sell with the limit order at a certain price, you probably won't get filled. And you're going to miss a really quick move. So that's why it's the benefit of trading small and just being able to short at the market. Another thing to point out, traders will sell here and, they may use a stop up here, or maybe they short up in here, or if they're smart, they'll sell up here and use a stop up here. And they won't get out. They'll bet worst case trading range, possible exhaustion. They're going to bet on the double top and a move down. So double top, whatever you want to call it, and measure move down, and at least a test down to here. So, but a lot of times in a trading range, price falls. It goes above obvious resistance and falls below obvious support. So it falls lower than what traders want. We had that over here. We're getting these stop entries. We buy. Price falls below all these buys. So if you're buying, putting your stop, one tick below here, or you buy above here, or you buy above here and put your stop down here, you're getting stopped out to the tick. And that's kind of, trading ranges are always gunning for support and resistance. So always in short, but this is a warning, great big bear bars, but look what happened as soon as price reached lows. Trading range day, everyone gets hopeful. Everyone, bears are selling, and if you're swing trading short, it's easy to be hopeful, thinking you're going to get a measured move down and price is just going to plummet. And if you're short, you make a lot of money. Well, yes, the odds are first reversal will fail, but this big bull bar it's a reminder that traders are scalping. Bulls. It was so easy for the bulls to buy and make money. So this is similar to over here. Possible exhaustion. We're pulling back. Bears got the breakout, but then immediately got bad follow through. Well, here we'll probably get a measured move down because it's not too far away. Over here, this is too much, most likely. Bad follow through. So right here, hang on one second. Yeah, so bad follow through. So it's reasonable, as crazy as it sounds, it's reasonable to buy above and you wait for a bull bar. Maybe you buy here, maybe you buy here. Some traders will buy here, buy more here and here, betting that worst case they break even. Most of the time they make money, and even 60% of the time they get back to here and make a lot of money. And that's the same thing today. Bulls will buy above here. And, you'll hear Al say it's not a good place to buy, and he is simply saying it's not a good place to buy for most traders because most traders will buy and put their stop down here. And that's the exact opposite of what institutions are doing. Institutions are buying and they're using crazy stuff, 20 points, pick a number. And they're going to buy, and they're going to buy this low, and they're going to buy more above the bull bar, and they're going to get out up here. Which leads me to, real quickly, that's why you can see right here, traders were front running. A lot of the bulls who bought up here and scaled in are trying to get out. They're willing to get out a few ticks shy of their first entry to get out as high as possible because they know a lot of people are trying to get out. And that's why we pulled back. So that happens a lot. You get to an obvious target. Sometimes it happens a lot with the open of the day, where we come close to an obvious magnet, a support or resistance area, in this case a resistance area. We come within a few ticks and we just sell off, and then we get a bear signal. And you're thinking, but wait a minute, trading range day, we should at least, we should probably get closer. Why are we pulling back now? Well, a lot of times it's a trap. But it's one of those things where it's tricky because do you get out? I think you get out below that bear bar. But anyways, so again, always in short, I wouldn't get out above this bar. I think the first level will fail. Bulls probably need a micro double bottom. They had the chance here. They failed. So most bulls get out above here. They would have gotten out above here if it's a bull bar. And, but it's hard to hold short through this, especially when this looks like a trading range. It looks like it's a spiking channel. Channels usually involve in trading ranges. So probably here always in long. Bulls get long. Yes, the first reversal up, first reversal down should fail. So theoretically, you can hold short below, but I think time of day makes that difficult. I'd get out. Theoretically, bulls buy again, but then they got to get out again. I would just stop. It's clear that this happens a lot. And let me just kind of backtrack to the prior few days. It's kind of like over here. So spike, pull back channel, and we get a breakout, bad follow through. We get a breakout, another bad follow through. So now we have a low two. Where do always in bulls get out that bought here? Here's a low two, breakout, another bad follow through, breakout. The worst thing you can do is buy, get out, and then buy, and then you get out, and then you buy this close, you get out, you buy up here, you get out. You see what I'm saying? So when you get this bad follow through, it's consecutive sell climaxes. Happens all the time. Sell climax, you get a breakout, bad follow through, another breakout, bad follow through, another breakout, bad follow through. Maybe you can count it as a breakout if you want it. But what happens is eventually traders, we've had too many breakouts. So you can either have a big sell climax like this where it's just too far too fast, or kind of like today, it's too much, or you can get just consecutive in a row, and eventually traders don't want to sell. But kind of same thing up, buy climax, another buy climax, bad follow through, another buy climax, bad follow through, another buy climax, bad follow through. So what's my point behind that? My point is, when you start to get breakouts with bad follow through, breakouts, and then it's questionable if always in traders get out or swing traders. Usually by that point, the market's converting to a trading range. So if you just get out, and usually if you just don't trade the rest of the day, you're really going to wind up with this. So you don't really miss out on much. Even over here, sure, if you got out here, you missed a little bit, but management becomes difficult. And the reality is, even on both of these days over here, the bears need a strong bear breakout before the bulls will really give up. Same thing over here. So let me just quickly skim through always in, just kind of all together. So bulls buy, they probably get out over here, they buy again. Probably not always in short yet, so bulls get long again. They get out below here. Do they buy up here? Well, hard to say. Not really good stop entry. I think it's okay to buy, but I probably just wait for this bar and buy up here. Maybe they get out here or they get out here. Aggressive bears will sell, or they'll just sell as it's falling. Some traders, I wouldn't get out above. I think second leg down. And, they end up, so bears are short. Bears probably get out here. Bulls probably buy above here. Bears would have gotten out above here. Bulls get out, but they theoretically have to get long again. Bears, bulls get out again, but they theoretically have to get long again. Same thing. Bears can sell each one of these. They can sell here, but they've got to get out. They can sell here. They've got to get out again. They can sell here, and they just get out. Low one short, bottom of trading range. That'd be the best place to get out, but I just wouldn't trade that. So, kind of final key thoughts before I ask questions. And feel free to type your questions out right now, just as you think of them. Biggest things I would say is always look to the left. when you see a big breakout and you see that it's stalling, look to the left. Then you got to say, why are we stalling at a 50% pullback for this sell-off right here? It's a little above 50%, but it's the same thing. Deep pullback, and then we get another breakout. But why are we not racing above this breakout? Normally breakouts break out of something. I know that sounds kind of dumb, but that's the truth. If you look to the left, let's just find today. Even over here, we vacuumed down, but we didn't really break out of anything. We just broke below the low, and we're trying to turn up. Here we kind of broke above the high, but really not really though. These are better breakout days, but still, it's still within this, and you're not really going to see a lot of trend days. Here's a good trend day. Look to the left, really nothing down here, and then breakouts. But look at the gaps. There's clear gaps forming, even if they're negative gaps, and you're getting clear trend bars. And here with these big bear bars, if you go on CNBC or Google, it's going to tell you about the whole Hillary, the FBI's, looking into the Hillary emails again and all that. But the reality is, I really don't believe Hillary caught. People didn't. Everyone's got their own reason to sell, and it's kind of the way I view Fed bars, reports, all that. I view it as this: traders know what they are. They already know what they're going to do. I'll use the analogy of when you have a report that's about to be released. Sorry, one second. I'm having a little bit of a cough, but yeah, when you have reports that are about to be released, a lot of everyone knows what they're going to do. They're waiting for the gunshot. Plus, even with this, yeah, it was unexpected, but look at the price action. The bulls get a breakout. They're trying to break above these highs. Eventually, if they prove to the bears that they can't do it, the bulls give up and the bears sell. Bulls and bears are institutions. They both buy and they both sell. So you have to assume that both sides know what the other, the cards in the other person's hands. So at this moment, the bulls know what they're trying to do. The bears know what the bulls are trying to do. Over here, the bears know that they're trying to get a measuring gap and break above. The bulls, same thing down here. The bears are trying to break below. The bulls know that. The bulls see trading range and they buy. So don't listen to the news. When you see this, you sell. Very small, very fast opportunity to catch a fast move, and you can do very well if you can catch it. However, most importantly, if you're buying over here and you see this, or you're buying anywhere and you see this bar forming, just exit the market and step aside, because you're gonna here's really the only way you can avoid a loss. You buy here, and theoretically you buy more here, and you've got out. Look what happened. So let's find this really good bull bar here. Okay, so look at that. You buy this low, you buy more here, you have plenty of time to get out break even. So that's really kind of all I have to say about that. Let me look at questions. Okay, how many trades did I take today? I can't really remember. I'll tell you pretty much what I did. Kind of hesitant to do that, but I bought up here, got out right around here, and then I went short, but then I got out somewhere in here and went long again, and then I got out. I basically traded always in. I don't remember what I did. I know I actually got kind of lucky. I actually got out. I was short through this, and I actually took a chance. I really thought we would get down to here, so I kind of diverted from always in, and I really don't like doing that. But I was actually short. I had my stop kind of up here, and I was taking a chance. So I actually got very, very lucky, and there was honestly, I thought about scaling in up here, and I knew it was probably going to be just a break-even trade. And honestly, what kept me in the short through here was I was thinking about getting out, over here, but then we kept getting these tails, 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 and I was thinking, well, the Bears, you know, I'm certainly not happy by this, but the Bulls are not doing what they need to do, and there was no way I was expecting that, and I got very lucky by being short through here, but you know, I really don't like doing that, so let me rethink that. So I bought and got out. I went short, got out around here. I bought again. I was short through here. I got out down here. And then I think I sold here. And I bought ones here, and that's all I did. And I got out down here, and I stopped trading. But I primarily try and trade always in. And I'm trying to get better at simply holding and getting out below bars, the traditional always in. But it's really hard for me when I see these big bars. So, but I try and swing trade the most. I try and swing trade when I can, and so I think I took 5 or 6 trades, and I think one of them I think 2 were small. I think I had 1 break even, maybe 2 small losses on a trade. I can't really remember honestly, but and I got pretty lucky by being short when this happened, so that was good. Okay, yeah, okay, since I just talked about a lot of them, I'll describe my reasoning. Okay, so I just bought up here. Uh, I got long here, stopped down here, and I was trading small. One thing I would say to everyone: trade really small if you can. The smaller you can trade, the better. I've always believed that, and it took me a long time to accept that and truly try it. But I wish I would have done that a long time ago. I'll put it that way. It's a lot easier to make decisions when you're trading smaller. But sorry. So yeah. So I should check on something real quick. Yeah. So I bought up here, stopped down here. I actually got out somewhat during this bar, and then I went short a little later than I'd like to, and I ended up getting out for a small loss. So basically 2 small losses. Ended up buying somewhere over here, and I just had my stop down here. And my reasoning for buying up here was spiking channel, but the pullback, I was concerned when I saw this bar. You can see this high closed at the high was 30.50. This close was 30.50. You don't want to see that. That's why are you have bulls buying this low, scalping up at one point, and traders buying this close, but then immediately trying to get out. That's not good. And you've always got to be concerned when it looks like it's in a channel. Traders sell when bulls are at their strongest. So you've always got to be concerned when you see that. So I should have gotten out below here, but I was a little slow. I sold down here. I was hoping for, and it's a little too aggressive. I was shorting in here, and I was really hoping for this bar to close on its low. And I'm trying to stop doing that as much. I just don't like it. It's, more times than not. One thing I've learned is you don't miss out a lot on swings if you just wait for the bars to close. Sure, sometimes you're going to miss this. If you sell up here as it's falling, yeah, it's better to sell up here than this close, sure. But at the same time, if you sell this close, put your stop up here, your probability is so high that, it'll be a good trade. And I bought here because, theoretically always in. So bulls buy, they get out theoretically, they got to buy again, or they buy on after 3 consecutive bars. So I bought because the first amount will fail. Strong enough breakout for 2 legs up. I got out up here because, I'm leery, exhaustion, we're at the high of the range. I don't want to be long up here. So I got out. I ended up, what I do, I ended up selling somewhere. I think I sold just kind of at market during this bar for my stop up here originally. But then we started getting this, and in hindsight, I should have just gotten out. But I thought, I was really thinking that we were close to the top of the trading range, so I just used a wide stop, somewhere. I think I just arbitrarily put it right here for the moment, and I didn't really pay much attention to it at that moment. And my reasoning for that was just trading range. It looked like a trading range, and I was thinking, bulls are, I really did not think we were going to get a measuring gap. But again, I'm really trying to stop doing that. I really don't like those trades. So I'm trying to kind of transition out of doing that. Now, I was already short here. Clearly, I wanted to stay short. I sold here because, I try and base my rationale on all my trades from always in. And, my rationale was, you know, bad signal bar for the bulls. So theoretically, always in bears right here are still short. Strong breakout. We're probably going to at least test the low of last week. So I was willing to sell it, but then I think I scalped out. I don't remember what I did. And I think the last trade I took, I bought here. And my reasoning for that was the logic I stated earlier. You had a lot of traders who will buy here and they'll buy more above a bull bar. So worst case, my thought was if I buy here, well, let me start over. First, you'll have always in traders who always in bears have to get out somewhere. So, they probably don't get out here. They didn't get out here. They don't get out above this bull bar because it never triggered. At some point, they've got to get out. It's kind of like over here. Always in bears, they stay short above here. They probably don't get out above here because of the selling pressure. Bear breakout, they probably get out above here, but it didn't trigger. Then we got another bar. So they probably get out there. A lot of times you get repeated patterns throughout the week, and they're very subtle. A kind of an interesting phenomenon, I thought, as a side note. This happened at, well, maybe this wasn't that, 12:05. This happened at 12:10. Yeah, okay, so it's interesting to me how 12:05, 12:10. So possible exhaustion gap, and we're going sideways. Possible exhaustion gap, and we're going sideways to down. And this happened at 12:10. So it's 5-minute difference. That's kind of interesting. And I don't think that's coincidence. I really don't. But yeah, I bought up here. I was hopeful that price would get up to here. Ended up late in the day. I just got out below here, and I stopped trading. So I bought mainly because my thought was a lot of always in bears would get out and aggressive always in traders would buy. And I thought worst case we may, get back to the entry somewhere. I should have bought above here again, but I just didn't do that. So I hope that kind of answers your question. Any other questions? Sorry, let me see real quick. Do you have any sort of preparation before the day begins? Not really. I think I really don't. It all, honestly, I don't, thinking about it. My normal, I'm Central Time, so it's 8:30 in the morning for me when the market opens. So it's not like Al where it's 6:30 in the morning. So, really, I get coffee, just kind of eat breakfast. Uh, yeah, it's really nothing really special. Now, one thing I try and practice is, I will say this, never rush. One of the biggest problems I used to have is sitting down, and it might be 8:30, I'd just sit down and I'd be like, all right, I've got to do something immediately. And you got to be careful with that. So it also depends on personality. I get why you're asking that question. For me, one of my biggest weaknesses as a trader is I get too aggressive at times. For a good example, I bought up here, and that's okay. And I should have gotten out sooner. That's okay. But I ended up selling down here when I knew the bears needed a little bit more. And I didn't get killed. I lost a little bit, and then it didn't ruin my day, but it certainly, those can ruin your day if you're not careful. And so I try and, I guess like to start the day, I try and try to make sure I'm not just too aggressive, you know? So maybe that answers your question, but nothing really in particular. I'll give it a few more seconds for questions, and then I'm going to go ahead and end the webinar. I'll tell you what day. So it's the 24th was the start of the week. Now, very quickly, since I just started doing this webinar thing, I'll quickly, just briefly, very fast talk about a few days. So gap up, and this happens a lot. You get a gap up, and you get bar one that closes on its high. But what you got to be careful about is, we're far away from the moving average. Think of the moving average as like I'll use the terminology as like you're at a car dealership, and someone's offering you a Honda Civic. Nothing wrong with the Honda Civic, if everyone owns one, but they're offering you a 2012 Honda Civic for the price of a brand new Lexus. Nobody in the world's gonna pay that much difference for a car like a Honda. They're not gonna pay the price of a Lexus for the price of a Honda Accord. So it's kind of, when you're buying up here, there's a decent chance you're going to get to the moving average and at least go sideways, so the bulls can decide what to do. So if you buy above that, I wouldn't get out because the first reversal down usually fails, but if you get a low two, you got to get out. Opening reversals, they happen a lot. Moving average touch bulls buy, but look at the buying pressure. Tails on top, and then we're getting a lot of bear bars, first reversal option fail. A lot of bull bars, probably always in long, sideways into the day. Here, another thing, big tail on top, so a lot of traders will sell this high, scaling higher. And you can see that big bars, traders getting back to this high. Always in short, they get out. One thing, I'll tell you what, okay, so let me point this out real quick. I know I'm kind of jumping all over the place, but this was interesting to me about the euro. And so you can see big breakout, so spike, pullback channel. And so I kind of zoom in on this. I don't really know what's to the left, but all I know is big breakout. So here's probably the middle of the breakout, so you have to always think, maybe a measured move. Here's the midpoint, so we're at a reasonable target. Then we get a rally. So theoretically, if I was trading the euro, and I would trade in the form always in, you're short, first selection failed, pull back, low one short. If you're smart, you get out below that because low one short, sell climax probably fails. Micro double bottom, bulls get out, and bears have to get short again. Sorry, bears get out, bulls get in. Bears got to get short again, but then they get this. Maybe they get out again. Really not that simple. Which keep going sideways. But at some point, this just isn't. It's hard to stay short, and you're getting a lot of buying pressure. So it's kind of one of those situations where if a bull buys here and uses an incredibly wide stop, they'll make money. But again, 3 bars down, maybe bears sell again, and that's why they sold right there. But again, tight enough channel, first selection fail. But then what do you do right here? So really weak channel. That's kind of one of those. Sorry, I kind of lost train of thought for a second. Well, okay. Where I'm getting at is this. week channel. I said down here bulls should make money if they buy and buy more lower. Maybe they buy up here. Theoretically, that's what this was. Now you get the best looking bear bars in a row. And we tried to reverse up. We're testing down. But then look. Bull breakout, fall sideways, bull breakout, sideways. Then you get these two bull bars. At some point, you have to agree that we're going higher. And if you just buy incredibly big bull bars and price reverses, and we get a spike in channel. So traders trade breakouts for second legs. Breakout, second leg down, bull breakout, second leg up. And usually, the breakout can be, in this case, it can be, bear breakout, a very small second leg down and then a rally, or a bigger second leg down and a rally. So in general, when you see these over here, here's what I'm getting at. If you see these exhaustion bars, then, the breakout's usually strong enough for a second leg, but that second leg can be one bar, or, down here, strong, probably exhaustion right here, probably not a measuring gap. Strong enough breakout for a second leg down. Well, the second leg can be small. So, and that's really, I'm kind of running out of time here, and that's basically all I've got. Biggest thing I would say is, well, two things. Trade small if you can, and, if you're struggling and you're scalping, consider giving swing trading a try. If you're making money and you're scalping, then by all means continue scalping. But that's really all I've got. I'm planning on doing these webinars. I'm going to try my best every day. And I'm going to try for, on Mondays, Wednesdays, and Fridays, I'm going to try and do it at, around 3:45, right after Al's webinar. And on Tuesdays and Thursdays, I'm going to try and do it around, it has to be around 6 o'clock or, 5:30 Central Time. So that'll just kind of vary. But I'll try and post links about it every day. All right. Hope everyone has a great weekend.